Hi everyone, Paul Long here, continuing our series, How to Buy a Business Using an SBA Loan. And in this video, we're going to talk about business valuations. Now, this is a really important part to any sort of business acquisition process because we want to make sure, and I'm sure you want to make sure, that the business is actually the value that you think it is. So the cost for one of these is anywhere from about $1,500 to $2,500. Again, they can range lower and higher, but that's the average range. And there's many different companies that are out there. It does take about 2 to 4 weeks for completion, sometimes quicker, sometimes longer, just like any other appraisal and workflow. But what's important to know is valuations must be done for the SBA, and the valuator must have certain certifications. So they have to have, at the end of their name, a comma and some 3 to 4 letters. There's a list of those that are on the SBA SOP. So here's the most important thing to understand. When you're looking at a business and you're saying, oh, I'm going to go out and get a business valuation, you need to have a conversation with an SBA lender before you do that. Because what I've seen quite a few times happening is you go out, you find someone who can do it, they don't have the letters at the end of their name, and they have to end up paying for a whole nother evaluation. So what's important is maybe have the institution that you think you're going to work with order the valuation for you. That way you have the information and it's SBA approved, and you can go ahead and use that for your SBA loan. So again, don't just ask your CPA unless your CPA can just give a back of a napkin one, or try to go out and get your own, but get that because it'll really save you time and money. Also, evaluation is going to be needed for if there's a close relationship between a buyer and seller. Let's say, for example, it's a family-owned business and you're selling the business to one of your kids. That is definitely going to need a business evaluation because we're going to want to know exactly, again, how much that business is worth, or is there, are you getting it on a really big discount, or are they overinflating the price? All of that's a part of there. Also, one is required when there's $250,000 or more in goodwill in the business. So again, let's say, for example, a $500,000 business, you have $50,000 in assets, that's going to trigger a need for a business valuation because there's more than $250,000 in goodwill, blue sky, that's not a hard asset. So keep that in mind on there too. Now, just like a residential or commercial appraisal, there's different approaches that go into that. There's for a real estate, there's a cost approach, a sales approach, and an income approach on there. Now, in a business valuation, there's even more than that. There's the capitalized earnings approach. This method refers to the return on the investment that the investor expects. So there, a number is determined. Excess earnings method, it's like the capitalization, except it separates return on assets from other earnings. There's the cash flow method, my personal favorite, and most lenders. This method is typically used to determine how much of a loan the business cash flow can support. There's also tangible assets, also known as a balance sheet method. This method values the business by tangible assets, fixed assets, things you can touch and sell. An intangible asset is your goodwill, your patents, your those types of things that it's really kind of difficult to sell or touch. And then finally, there's the value of specific intangible assets method, where this value compares buying a wanted intangible asset versus creating it. So what they do is they get all of those numbers in each one of those, and then they determine a final value. And most of the time, a lender is going to be looking at the cash flow method and the tangible assets method and what the final value is for the business. Hopefully that helps you understand the business valuation approach. Again, make sure you get with your SBA lender to get one ordered, and don't go out and just get one on your own because you may have to end up doing 2 of those at another time. So again, you can check out the other videos in the series at paultlong.com and look forward to seeing you on the next video.